Yes. Okay. All right. So welcome and good day, good morning, good afternoon to some, and welcome to today's Bretton's Week Ahead webinar. I am Kenny Simon, and today is the 16th of August already. We are midway of August and almost ending the quarter of the year as well. So the last quarter of the year, and we have lots to discuss in terms of movements of various currencies, but most importantly on Monday or Monday's week ahead, we're looking at the past 24 hours, of course, of what had happened, as well as top news that are stirring the market, but most importantly, to look at what we may be expecting for the whole week. So here, for example, on DailyFX website, we can actually see that the focus has actually been on geopolitical events as well, but then looking at gold's prices, as you can see, they have actually also put a nice price right there at 1785. They are eyeing the 1785, and this morning they were talking about the 1780s area as well on the news and various other websites as well. So gold, we want to definitely take a look at gold. And they are also talking about the connection between gold and Chinese data. So, but then we are looking at the word resistance right there. So here, this is where we have talked about it yesterday as well, that we are looking at more potential of short-term fall for gold, right? And then here they're talking about resistance level, which basically confirms the ability or probability of gold to actually go down first before it actually go up. So there is a lot of potential of gold buying going on with the monsoon wedding, with Chinese, Indians and Chinese buying gold at the end of the year, of course. And that might actually, bring the gold's prices up as well, because the demand would actually be really high. But then now I think it's a time for them to pull down the price first, so that all these people can actually buy cheaper gold later on. So that's basically the whole idea, roughly, that we are expecting a fall of gold first, but we need to actually confirm with the charts as well, and then we take a look at that angle later on. Okay, so on the chart. So this is for gold, and for Australian dollar as well, we're seeing that we have got. Let's just look at that. We're just going through roughly of what has actually been mentioned in the news first, and then we'll go on to the economic calendar and look at the whole week ahead, what is to expect as well. So Australian dollar down on weak Chinese data, it says, and still we are looking at AUD crosses to the downside. So we want to take a look at AUD USD, of course, major pairs, of course, because if they are talking about gold, then we want to look at the US situation in the US as well. So this is where it is really important for us to do a bit of correlation. So if they're mentioning gold, then we're going to talk about US data, US situation as well, and then look at the negative correlation between the US and the gold's prices. So here, Australia and Chinese data, or in China and Australia basically have got a positive correlation. So anything goes on in China, if the data as well is weak in China side of it, obviously it's weak it's going to be weak because it's a correlation. Australia has been in lockdown, has actually also impacted a lot of economic import-export relations with China. So that would definitely impact Chinese economy, and then the Chinese economy that's going down would actually then be impacting its data, and then it goes like a vicious circle and impact Australia again and stuff like that. So they're in a very strong correlation, positive correlation for between Australia and China. So here we can see that it's got loads of connection of the dollar as well. It says here US dollar analysis week ahead, and then it gives you a string of Asian currencies as well. So we want to take a look at what's going on with the US dollar as well, US economy as well, and various other things. So with that, we want to just quickly go on to the economic calendar, and we want to look at all the high impact data for the week. So I'll usually use the filter right here, but before that, yeah, so I'll take off this one, medium high impact, apply filter, and then we go on to the week. So this week, okay. Now, nothing happened on Sunday, okay. It's a religious day, basically a religious day for most of the European countries. As you can see, France, Italy, Europe in general, even here on the Orthodox side of it in Cyprus and Greece as well. So it's been a sort of very quiet, but on the vacation side of it, most people are actually celebrating that Assumption Day as well. So it's quite a global event in a way. Here we're looking at Monday. So Monday the 16th. So Monday the 16th, we have got JPY. That's really important right there in red. So high impact, impacting Japan. So we want to look at the Japan's GDP. So if we go on to just Google and Japan GDP, and we click on GDP, maybe data like that. And then we go on to news. And you can see 1 hour ago, Japan's economy bounced back ahead of the Olympics data shows. So here we can see positivity for Japan. It's reflected by its GDP. So when we go on to the heat map, we might be expecting the JPY to be on the upside. So this is GDP. So that's Japan. Japan's GDP rebound, 1.3% annualized growth. Okay, so that's good. Grew at twice the rate as well. So it's quite positive. So that's all the headlines that you need to see, just so that we can confirm that with the tools that we use on Action Forex as well, like the heat map, the top 10 movers, as well as the action bias, just to see whether it reflects that. So we're expecting that side of it, but we need to confirm on the trend as well, whether or not there are participants trading JPY crosses as well. And then what is the current trend as well? So then we've got Chinese data, as you can see, very negative here. So it should actually be impacting Australia, dollar to the downside. But we've got Australian figures tomorrow, mainly a meeting minutes tomorrow, August 17th. But we also have, I would say, high impact data for GBP. So we want to look at GBP. And when we look at GBP as well tomorrow, because of the volatility, we might actually expect gold's volatility as well, because of the correlation between gold and GBP crosses. So that is where we might expect more movements of gold as well, actually, tomorrow. But together with that, we also have retail sales for the US. So then we can actually expect good movements in gold as well, because we have got the catalyst to move both GBP and USD. So, okay, that's a good thing. And Wednesday, quite a lot of data, a string of high impact data for New Zealand. So that would also be in correlation with AUD as well. So both the antipodium currencies, Australian dollar and New Zealand dollar, would actually be moving, I would think. And also still we would have GBP's number right there, a string of GBP and Euro on the medium impact. But we also have Canadian, and tomorrow is the FOMC. Sorry, not tomorrow, Wednesday is the FOMC as well, before some other data kicks in. But we are seeing Australia again moving Thursday, and Friday, the last day of the week, the last work day or trading day of the week, we are seeing interest rate decision in China. That would actually be giving us the clear hint of Australia's trend as well, Australian dollar crosses trend. and then it's got retail sales on Canadian. So yeah, that's roughly it for the week ahead. And what we can then do is to focus on more on what's happening today as well, and also that might impact tomorrow. So let's just see. So here we can see that Australian dollar and Japanese yen would probably be the ones that are moving a lot. But let's see, let's take a look at the Action Forex top movers as well, just to get a bit of an idea of focus. Okay. Thiruvan, sorry about that. I'm just admitting you in right now. Okay. Hi, Thiruvan. How are you doing? Okay. Sorry about the delay in letting you into the room. Okay. I've just noticed. All right. So there you go. Welcome to the webinar. All right. So hope you have had a good weekend, Thiruvan. How are you doing? All good? Okay, so let's get going into the top 10 movers, as you can see. And top 10 movers, as we can see, the focus has been on the Australian dollar so far, but on the sell side of Australian dollar. This is not a direct reflection of the trend. Of course, we need to check the trend on its own. But the ones that I am looking at that has 4 dots, I would list that down first, which is AUD, because 4 dots means that the clarity of trend would most probably be there, but we need to confirm using the charts as well on our own. So AUD, CHF, and CADJPY. Okay, CADJPY on the downside as well, you could see there, but we have our trades open on CADJPY, AUD, okay. So these 3 has got 4 dots, meaning a little bit of clarity potentially on the trend side of it on all these time frames, but we want to confirm that. But the first 3, AUD-JPY, AUD-USD, and Euro-AUD, so all the AUD crosses. And as you can see, AUD-JPY as well. So JPY because of the GDP, but here, because of positivity that we have seen, right, JPY on the news, it looks like it's on the upside because the economy is recovering, doing well before the Olympics. And then AUD is to the downside because of all the things that is actually happening in Australia as well, Chinese data as well. So, and they are negative. So what we can do is go to the heat map and take a look at the trend side of it. So the trend, we've got some dark blue, dark red, which is a very good sign. As we can see, all the currencies on the left seems to be really bearish against the JPY, which is a very clear sign, good sign to know that. And if as we go downwards, let's look at individually all these pairs. JPY, as you can see, lots of dark blues are just popping up as well. Especially against the dollar, euro, GBP, CAD, AUD, a very good sign. Not very clear on NZD at the moment. It's got mixed colors right there, but it's building up in the clarity of trend for JPY crosses. So we want to take a look at JPY crosses today for trading opportunities. Also, we have got something very, very clear, AUD against the NZD. So AUD against NZD, extremely bullish, extremely bearish, sorry, as Australian dollar, extremely bearish on all time frames against the NZD. So that is something that I want to take a look at as well, and see whether or not we can look for correlated pairs, especially because the trend is really looking quite clear. So we want to take a look at that pair and then analyze the trend onto the chart. Okay, so time for us to actually get going onto the chart itself, but let's talk a little bit about what we've talked about yesterday in our commodity session, especially with gold, just to see how has it actually been progressing. So far, we will talk about NZD-JPY as well because it has triggered one of our sell trade idea. or trade signal right here, basically. So I have given the sell at 76.90. So it has triggered that. It's on its way down, and the take profit for that is 76.60. That's for NZD-JPY. But let's take a look at gold first. So gold has been seen to be, we've talked a lot about repurchase, a repo, and things like that yesterday. I'll make a tutorial on that as well, so that we can understand what does repurchasing, reverse repurchasing of assets by the Federal Reserve. Basically, they would impact gold's prices to the downside. So if they are purchasing the asset, usually a lot of liquidity comes into the market. But now liquidity is taken out of the market by the Federal Reserve because they're doing a negative repurchase repo. So I want to explain all that later on, not in this session, but to have it as a separate tutorial lesson, so that we know how to predict the gold market using fundamentals as such. Okay, this is really important as well. So this will be part of the certification course program by ATI as well on gold. So that is where we can actually predict gold prices much better. Okay, so here, excuse me, that we are looking at gold prices on a daily chart, and it's been giving us some hints as well, together with fundamentals. On the fundamental side of it, it looks like we have got more room for a downside move and for gold to actually drop first before it goes to the upside, mainly because of all the demand that will actually pick up as well from India and China to buy gold. So there will be reasons to believe that it may want to actually drop first, so that it will go up later on. So people, I mean, most investors, traders will have the ability to buy it cheaper. So here, for example, we've got sort of a clear indication of a downfall, a reverse, and that reversal right there is reversing as well back, and it has been caught at the 100 EMA right there, which is a good sign sometime when we are looking at it from an ABCD pattern perspective. So if I pull that one down, I wouldn't actually pull that A to the B right here at the spike. I would prefer to have it here. Now, if it is here, it is closer to the 61.8, but if you take that spike to make it B, it is exactly at the 67%, which we don't usually use a 67%. 67% is usually used for SL. Your stop loss would actually be at the 67%. So what we can then do is we can still mark it this way. If you want to use this, it doesn't really matter, but I would prefer to use this one here, this level as my B, and then look at it as a C point right here. So if I take this one down, then it's got an ability for it to actually fall quite nicely. But one of the reasons why I like using the ABCD pattern sometimes, whenever I see we've got C point like this, is so that we can actually get the centroid level, just giving us an idea of the centroid level as well. This is quite important. So if I take that there, bring it down here, okay, take that there and click there. So we can see that 1668.86 seems to be the area that we're projecting the fall to be. Of course, this is on the 4-hour chart, but we don't know whether it would actually definitely fall exactly there, or maybe we need to look to the left as well. But the centroid trigger price is quite interesting at 1750. 1750 is a very much talked about price as well in the market. So when we go onto the daily chart, for example, and let's say I change that to yellow, so we know that that's the centroid line. Okay, you can see that it's bang on the support area as well, and support can become resistance as well, and that is exactly the centroid price. So it's quite a significant area, and you can see more support, some resistance as well, and that is a good sign that the centroid has actually gathered that kind of data, and it's actually a good sign. So that could actually be either support in the centroid, or that previous support becomes resistance and then trigger the price for the fall of the price of gold. So we want to also monitor what's going on with the US crosses as well, and various other, so that we are in a better position to actually decide what to actually do with gold at this very moment of time. Now, for retail traders, short-term, intraday, scalpers, and all that, we can actually see that if it is on the 1 hour chart, we can see that the movement of price is to the downside. It's been reversing. It is trading right now at 1773.64. But what I can actually see is that on the 1 hour chart, you have got this huge candle right here, which is a bullish candle. Now, it needs to come under that bullish candle, and perhaps we need to find whether or not to the left we have got the support of bearish mother candle. Now, if we go into the 4 hour chart, we can see that. But if we were to be on a shorter time frame, we cannot see we cannot refer to clear bearish candles. But here on the 4 hour chart, we can. When we look to the left, you've got bearish candle here, really long bearish candle here, and another bearish candle here. So as of now, as it falls, I would think that the current price now is respecting the length of this mother candle. So the closing price would actually be there, right? So that closing price, let me just change it and make that blue, so that that becomes a support potential area as well, because it ends that selling spree have ended there. So this selling spree could also end here at 1763, which basically gives you the hint that this is where you exit, and you can re-enter and sell again. If you're selling right now, make sure you exit at 1764 at least, just before it reaches 1763.60. Okay, just so that we be on the safe side, because it could also reverse there. We've got a bullish candle here as well, you see. So it could actually reverse if it wants to, and the market encourages it to reverse. It might reverse slightly earlier at this opening price of this mother candle at 1764. So I would think 1765 would actually be a good place to actually exit your sell trade if you're already on a sell for gold at this moment of time, because the bias is to the downside for gold at this moment. So if you are selling, make sure you exit at 1765, and then it's probably better for you to re-enter and sell again once it goes down, and then maybe goes down to 1760. So when it goes down to 1760, you can actually sell again. Okay, so that is your second entry for the sell for gold. That is from short to medium term. So this is what I feel would probably be best to actually do, rather than just leave it to sell and then not exit and re-enter, just because we are on a Monday and unpredictable as well, a little bit too early as well for the liquidity to really enter the market. So we want to actually be on the safe side, taking smaller trades and exit and re-enter. It will probably be better. If not, we might actually get trapped into the correction as well. So we don't want to do that. Okay. So there you go. I've put the red line there, 1760, as your second entry for the sell, because we have got this very long candle right here. So I would think it's probably better for the second sell entry. Once you sell entry, the second one at 1760. Your first one would actually be based on what you're already doing right now. You can actually enter a sell right now, for example, if you haven't entered the sell already, but make sure you exit at 1765. So you are entering now a sell, let's say, and you are exiting at 1765. That's your first entry and your first exit. Your second entry, 1760, sell again. And then your second exit or TP would actually be, I think would probably be better just above the 1749 area. I think just to be on the safe side as well, 1750 or 1752, something like that would probably be good, just above the centroid price. Centroid price at 1749.98, so we take that at 1750. So better to exit at 1752. That's your second exit, by the way, okay? Based on the second entry, which is 1760. So that's basically what I can see on the gold side of it, of what could potentially happen at the closest term, because as we go into the daily chart, there is a very, very strong support area at the 1760 area, 1763, 1762 area here, as you can see. Okay, we've got support, very strong support right here on the blue line right there, 1764.57. So that has taken price of gold quite strongly to the upside and reverse as well when went back up again in that area. So we want to, if we want to sell, we sell a little bit first and then make sure that the market is really strong to the downside. Then we re-enter and re-enter following the trend. The trend at the moment is biased to the downside as prices under all the three lines, most of the three lines as well in the most of the other time frames. So even from the shortest time frame as well, it's just it is turning back downwards, not very clear, but on the 4-hour chart, it is already under the 100 EMA as well, and it has actually given the hint of a reversal right there. So that's why we want to take little by little, as opposed to really be sure of the trend. It is biased to the downside, but it's not strongly bearish as yet for the gold. So we need to be careful with that. We need to know how it's respecting all these mother candles as well. Okay. All right. So that is for gold. Any questions on gold so far? You guys okay? No questions on gold? One second, just find the message. Okay. All right, let's see. Questions. All good. All right, perfect. All right. So gold, that's good. We also want to just carry on and talk a little bit about oil, because yesterday was an interesting oil talk as well for both oil and Brent. And basically, US oil, I've just put up this box, which is another bearish or selling zone in within the existing selling zone, the red one here, and then we did another one right here. And it has actually gone down quite a lot already. And it is respecting all the lines that we have actually plotted together, and it is on the way down. So I see that it may actually want to go down a little bit more until the end of this box right here. But at the end of this box at $66.50, it might actually be a support area for price to go up. So whatever you do, if you're selling already, make sure you exit before 66.50. So 66.55, something like that, just exit it so that it be safer for you to do so. Okay, good. So that is for US oil. We also talked a little bit about UK oil, which basically mirrors, as you can see, the shape and the pattern of price as well, mirror very closely with what's going on with the US oil. So UK oil is correlated very nicely. It's trading right now at the 69.26 area right here, and previous resistance might actually become support right here as well. We don't know that yet. We do have a support candle right there, so it needs to actually come under 69.20, because remember, with oil prices, we can use the psychological numbers right now. So it is approaching 69.20. So in order for us to know whether or not it is biased to the downside much more, is to wait until price drops under 69.20 so that we can then sell at 69.10 at least, okay? But we want to look for this area right here. It's really, really crucial, because if I take all these lines up, okay, and just looking at this powerful area itself, we want to mark the support here, okay, the ending of the bearishness here as well. And then we have got the lowest body of candle right there. These three lines itself could potentially be very strong support area. So we want to look at what happens when it goes there. So it could also be an indication for US oil as well, because sometimes we get a little bit more technical clarity on either one of the oil. Sometimes even though the pattern is actually clear, but when we look at the US oil, maybe not as clear, but it mirrors what's going on with the UK as well. So they are very strongly correlated, but sometimes one of the oil gives us better pattern as well, you see, so better clarity. So here I see that it's got very strong support here, as opposed for it to actually continue the trend. So we want to see what's going on, okay? And because usually sometimes what happens is that if we're expecting a reversal right here, then at the same time, some news might come in to actually become a push as well for it to actually go up. So we don't know that yet. So it's best to see what happens when it drops down. Okay, any other questions, you guys, with any other trades that you have? Before I think it's best for us to also go to AUD and ZD, just to see whether we have got some trading opportunities right there, okay? This is USD JPY. It has done really well on the sell. We had some sell orders. It has hit its TP as well. It has gone under that sell zone. Give me a second, guys, sorry. Okay. Excuse me. And this is USD JPY, GBP JPY. It's been really good for GBP JPY because it has respected that many times. All these bearish candles, as you can see, we have laid this bearish candle months ago, I think about a month plus ago. These bearish mother candles right here, indicating to us that this whole area where the mother candles are, the four mother candles, are giving us a lot of selling power, and it has been sell here and more sell there, and now it's continuing to actually sell. And I see that beyond this price, now it's trading exactly at 151.52. This is GBP JPY we're talking about. And as it goes lower, 151.50 and under, it might be triggering our next selling price at 151.40. And we can see lots of bearishness right there. So that's a good sign as well. And we can actually look at one rectangle area right here. It's entering a bearish zone at this moment of time. Okay, so here let's put price. I'll just mark it as yellow so it's more obvious. Okay, so that one there is 151. Okay, I see a potential of a sell for GBP JPY. Selling price 151.40 and take profit 151.10. So that's about 30 pips potential right there. We have got maybe more selling as it goes under 151.00 because we're backed up by quite a number of bearish candle right there. But we just need to watch out for a support area right here. So that is a support area at 150. So I think a better price to sell will be at 150.90 anyway. Later on, that's the second price. First price of sell entry 15140, and then take profit 15110. Okay. And then I see a second potential for us to sell even more, I think, at 15060. Let's say, give me a second. This could be your pending order. There we go. So 15060, 15090 to actually sell. And let me just mark that as a rate. 90, 60, 30 pips. That's your second potential sell. Okay. Right. Okay. Go. All right. There we go. So 150.90, take profit 150.60. This is your second sell entry and your second TP. Your first one is 151.40, take profit 151.10. Okay, 30 pips there, 30 pips down as well. So 60 pips in total in potential of your first and second and sell entries. Okay, this is for GBP JPY. Also, we are looking at the strength of the JPY because of its economy, and GDP figures are quite good and all that. So that might actually be triggering more selling opportunity for GBP JPY. But it's best to take this. Oops, sorry. Okay. Oh, don't know what I did there. Okay. There you go. Go back. All right. So this is for GBP JPY. Let's take a look very quickly at AUD and ZD, whether or not we have got opportunities there or not. So AUD and ZD. Okay. So AUD and ZD seem to be really bearish. And we can see that on the heat map as well, really very clear on the bearishness area. We've got a bit of an A here, B here, C here, D. This is on a weekly chart. We go into the daily chart. We see that clearly it's on a downtrend under all the three EMAs as well. From the 1 hour chart itself, very clear downward movement. The trend, the way the three lines are moving as well. So it is actually showing very nice downward trend. We want to check the strength of the downward trend using the average directional movement index, or ADX. And we can see very, very strong downtrend on the 1 hour chart, very strong downtrend and very nice movement of the three EMAs as well on the 4 hour chart. On the daily chart, it is still looking not too bad, but in terms of strength, still on the upside and quite strong. Weekly chart, it's dropping and it's also very strong as well. So we've got 3 to 4 time frame giving us quite clear indication of downtrend for AUD USD. So right now, the way that we would approach this is, of course, we want to sell, right? But we don't get overly excited with a fall. We need to actually ask ourselves, where could the reversal be? So we want to look at support. So I go into the daily chart and I can see that as it falls, it's got a nice A here, B here, C here, D, right? And using the pattern itself, if I take this A right here and I put it here and I gather that, copy from here to here, it shows that I could have exited earlier at the D point. But right now it's still dropping. But on the left, I have noticed a support right here. Yeah. And not only this candle right here, but the body finished closing price of the bearish candle is actually slightly earlier here. Okay, so we've got current price for AUD and ZD is at 1.0440. It is heading down towards very close to 1.0434 and 1.0428 which are both the areas that I have lined up to be potential area for you to exit before it reaches there. So I would already exit by now at 0460 earlier. I would have already exited this trade if I was already selling. So at this moment of time, I just prefer not to do anything but to exit, not to actually go into any sell yet until I see the potential of it coming under the price, and then we might see more selling pressure and then go and sell much more. So I would think it's probably best to look at a trigger sell price at 0410 instead. Okay, so this could potentially be a pending order. 0410, I'll mark that a bit lower. Let's just see. 0410. 10 pips under the psychological number of 0420 or 20 psychological number. So 0410 would probably be ideal to take the 4-hour chart, but there's not much data there. So I need to go onto the daily chart and look for candles, mother candles that could actually be helping me to understand whether or not we've got selling pressure. Now, not much selling pressure that I can see on the daily chart, but when I go onto the weekly chart, I can see a very big mother candle, bearish mother candle, which is right there. So here, for example, I can then draw based on the weekly chart the presence of a bearish selling zone for AUD and ZD, but this is based on the weekly chart. So then we go on to lower time frame and look for support at the lower time frame, shorter time frame in within that rate zone. Okay, but the way I look at it is that there is not much data reference point in that zone from low time frame. Okay, so low time frame, that also means that you may not have much opportunity trading very short term, or not much data that you can rely on trading the short term for this pair AUD and ZD. Which also means that we might actually have a very good opportunity, especially because the data is on the longer or higher time frame, which basically means that we might have bigger moves, you see. So it has been giving us hint of this big move drop right here, right? And this is a good sign that there is a potential for it to come down a lot and fall quite a lot for AUD and ZD. So with that, I think we can actually use the daily chart to mark all our positive areas, meaning support areas and exit areas. So what I would then do is to have different color. Maybe yellow would probably be a little clearer, and make it a little bit thicker as well. Okay, so I would mark support areas from all this bullish area, especially there. Also some finishing of bearish candle as well. Finishing of the starting of a bullish candle. And also right here. Okay. So these are all area of support actually, and exit area or exiting before this area right here. They are not very far away from prices, so they're still okay for short-term trading as well. So you can actually, exit much earlier as well if you're trading short-term. So we have, I would think probably best for 0410, as we have talked about, to actually be the selling price. Let's just go back here because it's trading at 0441.40. Even now to actually sell would probably be okay, but it's just that you want to exit as well at 0410 at least. Yeah. Okay, let's do that. Another area, just to test whether or not, because it's looking definitely like the sell is getting stronger and stronger. So we also evaluated using the average directional movement index. Really strong, as we can see. Daily chart, 1 hour chart. Everything is looking good on the strength of the downtrend falling of AUD versus NZD. So trigger price even now onwards if you want to actually sell potentially, but make sure you exit maybe 0410 just to take 20-30 pips, 20-30 pips. And as soon as it comes into the zone, I think your probability it will get higher for you to actually enjoy the ride to the downside. Okay, so here, let's see. We've got some ABCD as well, but the C point may not be that nice. I've got one here, but already almost ending as well. A here, B here, C here, D. Most of the C points touching either one of the EMAs, which is a very good sign. So yeah, this is doing quite well on AUD and ZD. So I think it may be a nice one to actually trade and follow the trend. So the trend is down, okay. So the aim is only to the downside and to basically hit all these TPs little by little, and that's basically one way of riding the trend quite well. Okay, so that's for AUD and ZD, guys. Any other questions so far? Because I would be scouting the market and putting the signals as well, but you can communicate with me directly for any of your own charts and signals that you follow. Yes, of course, we can look at GBP USD. Right. Yes, GBP USD, very interesting. I have done some analysis on it yesterday. We've got a bit of a W type pattern as well. But right now, in summary, it is showing like it is on its way down. I'm looking at the daily chart. It is showing signs of falling. Basically, it's trading at 1.3843 or 44. So your sell price can actually be triggered quite shortly at 1.3840. So 1.3840 onwards, you can start selling or selling now if you want to take the risk as well. And I think 3840, you can, if you sell at 3840, you can actually exit at 3810. So that is 30 pips. Profit potential. Okay, so once more, 1.3840 you sell, 1.3810 you exit or your TP there. Okay, so and then we look at more areas to actually sell later on as it goes lower and it gets action. So we don't know that yet. So it's best for us to wait a bit, take a little bit of sell entry right here with a little bit of profit first while it gets stronger. Then you enter, re-enter again. Testing 1, 2, 3, testing 1, 2, 3. Is it okay now? You guys can hear me? Okay. Okay, good. All right, so we can take a look at US 30 as well, but GBP USD, is it clear? Yeah, did I mention the price of sell entry at 1.3840, and then you enter at 1.3840 and you exit at 1.3810. That's clear, right? For GBP USD for the shortest term. All right, good. Okay. Let's take a look at US 30 monthly. Oh, give me a second. All right. So US 30, yes, it's going through quite well to the upside. I've mentioned as well, based on this box right here, it's got a good chance for it to reach the 36,666. It's quite crazy with all the sixes. So 36,666 would probably be the area that you can exit, or 36,661 or 36,660. Maybe you can exit at 36,660. So that would actually be the end there. It might actually have some reversal potential right there. So you still have a little bit of space until it goes to that area. So that area where I have marked as that cross right there with a horizontal yellow line is at 36,661. So you can choose to exit just under 36,661. Okay, for US 30 at this moment of time. It's still doing well in terms of fundamentals as well. It's still to the upside, and everything is still positive on the other side. So yeah, okay, still room for it to go up. All right. Any other pairs that you guys want to take a look at? USTGP. It's got some reversal potential right there as well, but I think we need to also write the trend much more on AUD crosses because of a lot of Chinese figures, news as well, is talking a lot about China. So AUD and NZD pair would probably be quite good for us to monitor. Let's also take a look at what would AUD NZD be correlated to much more. So let's take a look at currency, Forex, trading tools, Forex correlation. So here, if we go on to AUD NZD, so we've got AUD NZD right here. Now, two of the pairs that has quite high correlation with AUD NZD, not two, let me check. We have got 89 right here. AUD JPY seem to be positively correlated to AUD NZD. AUD JPY. Okay, so we can take a look at AUD JPY as well later on. I mean, you guys can actually look at it and see whether or not it is positively correlated. Maybe the patterns and the way it moves also correlate to AUD NZD. So we have got highest number you can see is 89 right here, and but negatively correlated is GBP AUD. So GBP AUD would probably be a pair that you can look at as well, but it's opposite the direction of AUD and ZD. So let's take a look at that. Let's see whether it proves to be good or not. So here, GBP AUD, right? So GBP AUD should look very bullish. Total opposite of AUD and ZD. So it is actually doing that at the moment, looking very bullish. GBP AUD. As I go further, yes, it's picking up quite well to the upside. It's trying to close a gap that is here as well, I think. This is on weekly chart. Monthly chart is going strong still, but there is a bit of reversal happening already, and I think it is following this bearish area right here, and it's got an area of support here as well, I think. Okay. Also an area of support here. Okay. All right. So it's trading at 88.71. So it could be a selling area at 88.70 as well, but yeah, not very clear yet. So I'm going to the shorter time frame, see what's happening. So on the 1 hour chart, GBP AUD, it's looking like it will reverse. So it's not really supporting the claim that it will be very strong. AUD and ZD, very clear downtrend, but GBP AUD, not very clear uptrend. It's reversing first, I think. So it's reversing and then it goes up, but it's still negatively correlated with the AUD and ZD. But at this moment of time, the timing wise, is very strong resistance, as you can see, right? So you've got all these 4 candles marking a very strong resistance already with lots of wicks at the very top. Okay, and all these candles stopped at 88.75, 76 area, which is only about 4 pips or so away from the 80 psychological number. So that's another reason to help us believe that this is a very strong resistant area and there's a chance for it to actually drop. So then we go into the 4 hour chart. We can see that, yes, it might be caught up there already to the downside. We've got bearish candle. Right now, the price is at 88.72. And it is already passing through opening price of a mother candle right there. So this is a sign that it might want to actually go down more, and it may actually be at a bearish type zone right there. Okay. Okay, so here, let me make this line a little bit thinner so that it captures the price more sensitively. There we go. Take that, go down to this area right here. That is 88.73. Price at the opening price of the mother candle. Closing price of the mother candle is at 88.28. So we're looking at 4 hour chart. Now, as it goes down, I think the best thing to do is if you want to sell, it's probably best to sell at 1.8870 to actually sell, okay? And then you want to look at 30 pips or so and look at all the support area that could actually be your exit area. So like this one here, 88.60 would probably be good for you to exit, okay? 88.60. So that's a really small 10 pips only right there, right? But it's worthwhile to be aware that we have got some support area right here. So maybe not ideal for us to enter just yet. Maybe you want to enter after it goes down at 88.40 or so. So 88.40 may be a better price to sell and wait if you want to wait that long, because if not, then it's it might reverse actually. So that's why. So it's too far down here. So the opportunity doesn't really, it's not really that worth, I think, for this one here at this moment of time, because it's not clear what could actually happen. This whole box on the 4 hour chart is only about 40 pips right here. But whether or not it will actually come back down all the way right here, we don't know that yet. So we want to see whether or not it might actually just, we've got a double bottom here as well. So that does actually show that it might want to go up more than it wants to come down. So we need to see what it would like to do. But it's just hinting us that it's got some resistance on the shorter time frame. But this one here is a little tricky, GBP AUD. I wouldn't take this trade at all, because we will be putting our finger in a spinning washing machine if we do that, from how I look at it. And not really clear. There's a lot of this could happen and that could happen kind of thing. So not really on GBP AUD at this moment of time. Okay. All right, guys. I think that's all I have for you guys. And if you guys have got any questions directly, you can always just message me directly with your screenshots as well. I'll help you out. And yeah, that's basically it. So any questions, guys, before I end the session? You guys okay so far? All good? All right, good. Thank you, guys. Thank you for attending my webinar today, and wishing you guys happy pipping for the whole week. Okay, so any questions at all, just message me directly as well if you guys want. Okay, all right. Take care, Thiruvan. Take care, Alfred. So we will see you guys again very soon. And with that, thank you and have a very good trading week, guys. Okay, bye bye for now.